We'll now begin our discussion of case 2A-5, analysis of mixed cost and a pricing decision on page 71 and 72 in the textbook. This problem deals with a catering company that serves food and beverages at exclusive parties and business functions. They have a heavy schedule during the summer months and holidays and a lighter schedule at other times. One major event that Lee is looking to book is a cocktail party. She offers a standard cocktail party and has estimated the cost per guest for this party as follows. And as you see in the table, she comes up with a $31.32 per guest cost. The standard cocktail party lasts 3 hours. Lee hires one worker for every 6 guests, which makes 1/2 hour of labor per guest. These workers are hired only as needed and paid only for the hours they actually work. Lee usually charges $45 per guest, and she's confident that her estimates of the cost of food, beverage, and labor, but is not as comfortable with the estimated overhead cost. The $18.63 per hour was determined by dividing total overhead expense for the last 12 months by total labor hours for the same period. Here we are given on page 72 by month, January through December, total labor hours for each month and total overhead expenses for each month. Alright, Lee's been received a request to bid on a 120 guest fundraising cocktail party to be given next month. She'd like to win this contract because the guest list for this charity event includes many prominent individuals. What we want to do with this problem is we're going to skip part 1, which deals with a scatter graph. We're going to actually do part 2, part 3, part 4, and part 5. Alright, part 2 asks us to use a least squares regression method to estimate the fixed and variable components of overhead expense. The solution to that, in using Excel, which I'll show in a minute, you should come up with the least squares regression method yielding an estimate of $5.27 per labor hour for the variable cost and $38,501 per month for the fixed cost. The R-square is 96%. In order to calculate the cost formula under the least squares regression method, what we would do is we'd go to Excel, as we did in problem 2A-4, and we drop in the data as given at the top of page 72. We'd get all the labor hours and all the overhead. I did not type in the months, but there are 12 months here with the respective labor hours and overhead. To calculate the intercept, once again, we go to Statistical, scroll downward to Intercept, and we then need our Y's and X's. Okay, our Y's would be the overhead costs. Alright, they are the independent variable, whereas the known X's would be the labor hours. I'm sorry, they are the X's are the independent variable, the known Y's are the dependent variable. So overhead cost is dependent upon the number of labor hours. So in order to make this calculation, alright, we then click OK. We end up with 38,501, which we already know. We saw the solution earlier. We then scroll down to do the slope. The slope, the known Y's would be overhead. Known X's, labor hours. Click OK. And we have $5.27 of variable cost per unit. So for every labor hour, there's $5.27 of overhead cost. Thereby going, alright, we then want to calculate the R-square. We go to Statistical, scroll our way down to R-square. We do the known Y's. We do the known X's. Calculate go, and there we go. We got the 96%. So as we can see here, our formula would be Y equals 38,501.13 plus 5.27x. That would be the cost formula for this particular problem. Part Part 3 of this problem asks us to estimate the contribution to profit of a standard 120 guest cocktail party if Lee charges her usual price of $45 per guest. In other words, how much would her profit overall increase as a result of taking on this new party? What we want to do is use the contribution format of an income statement that we discussed in Monday night's class. Our sales revenue for 120 guests, where we charge $45 per guest, would be $5,400. Our variable cost per guest would be 120 guests at $24.64 per guest to come up to $2,956.80. Our contribution margin, or contribution to profit, will be the difference between those two. Sales minus variable cost gives you contribution margin, therefore $2,443.20. Now the question you might have is, where does the $24.64 come from? Well, as given in the book, they told us that our food and beverages are $17 per guest. Labor, $5 per guest. In other words, we're paying our workers $10 per hour. And each guest requires 1/2 hour of labor, therefore $5 per guest. Overhead is a 1/2 hour, all right, for each guest. And therefore, we would then take our $5.27 variable cost per hour, as we calculated up above. We saw this up here. We calculated it using Excel, and multiply 0.5 times $5.27. We get $2.64. Added to the food and beverage, labor, overhead altogether, $24.64. Note that we did not discuss fixed cost. And the reason we didn't is because there's no indication that fixed costs would be incurred or would change as a result of this new cocktail party. If the additional cost would have to be taken on in order to complete this party, then we would have to subtract those from revenue. Alright, so it would be sales minus variable cost minus fixed cost. So anyway, there is none of that. Moving on to part 4, it said, how low could Lee bid for the charity event in terms of a price per guest and still not lose money on the event itself? Well, as a result, Lee could bid this job at $24.64. If Lee was to bid this job at $24.64 per guest, Lee would break even. In other words, they would have no profit. They would, if she charged $24.64 and had variable cost of $24.64, she would have zero profit. And that's all based on the fact that there are no additional fixed costs incurred as a result of catering this charity event. So any price greater than $24.64 is going to derive some profit and add to the overall profit of the business. Moving on to problem 5, or part 5, it says the individual who's organizing the charity's fundraising event has indicated that he has already received a bid under $42 from another catering company. Do you think Lee should bid below her normal $45 per guest price for the charity event? Why or why not? Well, just going to the solution manual, it'll be clear. Alright, as we discussed already in part 4, any price above $24.64 per guest is going to yield a profit. And therefore, we could bid below $42, potentially win the contract, and still make a lot of money. So that's what really needs to be looked at here. Alright, so a price below $42, say $40, is going to yield $15.36 per guest of contribution to profit. This does it for our discussion of solution to problem case 2A-5.